Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Tuesday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. So for today, we're going to go over the overall portfolio value. Of course, the value by the metrics. Then we're going to go over the buying power, where I got extra money from, and what I plan on doing with that cash, as well as our individual holdings to see which stocks may be overpriced for me, which are in a buying range, and also take a look at the watch list and see if there's anything near my buying price. So jumping in for today, we are down about $500. For the week, we are up $1,000, about 2% gain there. 1 month mark, we are up $3,600, 7% return. 3 month mark, up $4,400 with an 8.7% return. Year to date, which keep in mind it's just the beginning of March, we're up $6,100, a near 12.5% return. That 1 year mark, we are up $13,000, near $13,500 with a 32% return. And then all time since April, I believe, of 2018, we are up $29,453 with a 113.25% return. So guys, in the short term, anything can happen. That's why I'm not worried about losing $500 today, because that's a good thing. I actually like when I have red days, because that means I can buy the companies that I love at a lower price, and there's more likely to be a deal in the portfolio if it's a red day. It's good to see green as well, because that just means we're making money, making passive income, and the stocks are going up and appreciating, so my wealth is growing. But I actually prefer it when stocks are a little bit lower than my average cost, because then I have more opportunities to buy, and then that means that I have an overall, a better chance of getting an overall better return. So buying power went up $20 and some change because I got paid a dividend by Visa, ticker symbol V. So that's the big payer for that set of months. For this set in March, that 36912 is Visa. So now I have $99.74. I will be letting that sit until I get paid again next Friday, and we'll see how much cash I feel like transferring over. I might buy a share of Google. I do owe myself a share of Apple, so I plan on buying at least a share of Apple. We'll see if I put anything else into the portfolio. First up, we got the monthly dividend paying company, one of the most popular REITs when it comes to just the sector. Realty Income. Now, this is a monthly paying dividend stock, and the reason I own it is because I want that consistent monthly income. So I want it to be just like a paycheck. In the middle of the month, I get paid by them every single month consistently, and that's really what they are known for, is the consistency of their tenant base and the consistency of their payments. Now, they don't raise the dividend by a lot, but you don't really need to when you have this type of consistency. I do want to see the income go up, but I'd rather add more shares of this REIT, just because it's consistency, and it's one of those like sleep easy companies. I don't have to worry about it. They do triple net leases, so they have a very good business structure, and I want to own it for the long term. So as of today, it's at $58.38. Of course, the market is open, so that will definitely mean that the prices will change during the video, but that's okay. So today we have 5 shares, market value right around $300. $51.75 is our average cost. 0.5% of the portfolio is in Realty Income. For today, we're up $4.05. Total, we're up $33, and we have a total 12.7% return. And guys, this is one of those that it was up a bit, excuse me, but then it dropped a bunch. So I was able to buy this at a pretty good price. I originally had 170 shares. I sold out of those. Sold out of that position, out of those shares, because I wanted to pay off all my debt. Now I'm debt free, so I do want to add more to this position. And the dividend is coming in on March 14th, so right in the middle of the month, of $1.34. Now that used to be $44 or $45. I do plan on getting it back up to near $50 as quick as I can. But my main goal for the portfolio this year is to buy more Apple and Google stock, especially Google since it's at a deal. But this is one of those positions that I do want to build up. Next up, we got Ultra, which is down nearly $57 a share. We have 320 shares, $18,000 worth of market value. Average cost is $47.27. Around 33% of the portfolio is in Altria. Dividend King, $113 in the red today, but total we're up a little over almost $3,100 with a near 21% return. So guys, this business is completely shifted. The market has now seemed to understand that Juul is no longer going to be a lag on their finances. And overall, the profitability is healthy. They have pricing power. They have an addictive product. And people aren't, of course, they aren't smoking as much as they used to, but it's still a very powerful brand. Marlboro is the Coca-Cola of cigarettes. So I want to own them long term. I smoked for a while. I want to get a little bit of my money out that I put in. So I smoked for probably a few years. And I didn't smoke that much. It was like a pack a month. So it wasn't nearly as bad as of a habit as some people have. But I still want to use that money to purchase Apple. Specifically, that's the goal for Altria, is to keep buying me more Apple shares. Usually it's about 1 a quarter. And that's just going to keep on compounding. So as well as myself adding free cash to the portfolio, we also have Altria here helping me gain shares in Apple, trying to hit that 20 share count by the end of the year. Next up, we've got Coca-Cola, which is down almost $2 today. 15 shares, almost $1,100 of market value. Average cost is around $61 per share. Still a high price right here, but about 2% of the portfolio is in Coca-Cola. Today we're down $27. Total, we're up nearly $150 with a 16.5% return. Guys, this is going to be one of the pillars of the portfolio. Now, I get a lot of flack for owning Coca-Cola as I'm drinking Mountain Dew, because it's not a high growth company. It's not sexy. It's not, it's not groundbreaking. There's nothing like an Nvidia. It's not going to grow like a Tesla, anything like that. But there is a reason that I want to own it, and that's because I love Coca-Cola. I love the brand. Coca-Cola the stock company has made a bunch of millionaires over time, and I want to be one of those Coca-Cola millionaires. It will take a lot of money. It will take a lot of time. I know the growth isn't crazy, but I do like the idea of being able to grow my wealth with Coca-Cola. Next up, we've got Apple, sitting at around $240 per share. 10 shares, around $2,400 worth of market value. Average cost is around $220 per share. $220 per share is my average cost. 4.3% of the portfolio is in Apple. Today we're up $1.70. Total, we're up nearly $200 with an 8.8% return. And guys, Apple is my goal for the year is to get Apple to 20 shares. So I'm halfway there already. I started the year with 8 shares, so I want to do at least a share or two a month if possible, which would be about it'd be like $300 to $600 a month into the portfolio. But I do want to heavily put money into Apple, specifically because I want it to be the biggest position in the entire portfolio. And to do that, I need to add capital aggressively. Now, Apple will grow. It does pay a small dividend, but my main focus is to just get that to be the biggest position, because overall, I think it's going to be that, and Google and Visa too are going to be the big growers in the portfolio. So as of right now, for the 2025 goal, I started with 8 shares, so I should end the year with 18 or more. Plus, I'm going to be using that Altria dividend to buy me some more shares. So hopefully we'll get to that goal. But stay tuned, because I am going to be adding more cash every single month, as well as the dividend growth. Next up, we've got AbbVie at $209, 95 shares, $19,800 of market value. Average cost is $95.19. 35% of the portfolio is in AbbVie. Today we're down $215. Total, we're up $10,800 with a near 120% return. Guys, this is by far the biggest oak tree in the entire portfolio. This has been my best investment that I've put money into. Comparatively, it would have been nothing compared to Facebook or Meta. But, for the ones that I saw and I took advantage of, this has been the best, the best outcome, the best deal, the best purchase that I've ever made when it comes to stocks. And one thing that I do want to give myself credit for is not following the super investors, because Warren Buffett bought this company and then he sold out of it, I think 2 quarters later. He didn't own AbbVie for very long. But if you watch Berkshire meetings like I do, there's been multiple instances where he's been asked about pharmaceuticals, and he said he wanted to buy a batch of them, or they should have bought a batch of them. That was in the early 2000s. So here we are 20 years later, and he's still buying and selling out of these companies. And I bought it before Buffett did, but I've held it longer, and I've made a lot. I'm sure of course, he made more money on it technically because he had hundreds of thousands of shares, right? But on a total return basis, I know that I've outpaced him because I held on to the stock. So honestly, this could have been one of his lieutenants, buying and selling for him as well. But this is one of those that I'm glad that I listened to myself, right? I had enough confidence in myself and my ability to analyze the company to take advantage when it was down and just hold it, right? The only reason that I would cut AbbVie would be if the business fundamentals changed. They had a massive CEO change that would change the fundamentals of the company. So a change in leadership would probably do it. Or if the dividend was substantially cut and I found something else, like let's say they cut it down to it's because it's like $1 and change now, but say they cut it down to 50 cents or something, then I would probably put it into something else. But outside of those three factors, besides a fundamental change, a leadership change, or a big dividend cut, I probably wouldn't be selling AbbVie. So this is one of those that I'm just going to keep letting it grow its roots deeper and deeper, and I will eventually as of now, I'm using the money to buy, to help purchase something like Google, but eventually I would not be surprised if this dividend grows, pretty considerably as well, and I would love for the dividend to buy me a full share of Google or a full share of Visa in the future. As of right now, it pays $160, and Google right now is about that price range. So right now it is fulfilling one of my goals, to buy a share of Google, but eventually, Visa is $400 a share, so it'll take a while, but that's the long-term goal. Next, we've got Visa at $356, down pretty big today, 35 shares, $12,400 of market value. Average cost is about $350 per share. 22.5% of the portfolio is in Visa. Today we're down $184. Total we're up $307 with a 2.5% return. Guys, I love Visa stock. It is going to be the second largest position behind Apple. My big gripe with just the stock in general is $400 is a lot, right? That is almost 2 shares technically of Apple when you add in the dividends that I make. So this is one of those that I do really want to build it, but $400 is a lot, right? So this is one of those that, if you look at it comparatively, right, that is 6 shares of Altria. And I think it's worth it. I think Visa definitely, when it comes to growth and the overall trajectory of the business, the fundamentals of the business are so rock solid that I do think it's worth that amount. But that's just a lot of money to fork over for a single share. So this is one of those that I have to be a little bit more calculated when I do buy it. And it's one of those that it's such a high quality business that it's hard to get it at a markdown. It doesn't fall very often, so I have to be very observant and take advantage when it does drop. But by far, it's gonna go Apple, Visa, Google, Coke, and Berkshire. That's gonna be my top 5. So Visa's, honestly, I would not be mad or surprised in the future if Visa actually outpaced Apple. And then, of course, we got Google at $174. Big jump up today. 6 shares, $1,044 worth of market value. Average cost is around $194 per share. That went down because I bought another share. 1.89% or almost 2% of the portfolio is in Google. Today we're up $32. In total, we're down $115 with a near 10% loss. So, guys, this is another one that this is the stock that I want to be purchasing. And that's going to change, right? Over time, stocks fluctuate, prices change. So right now, as in March of 2025, this is the main stock that I want to buy. That doesn't mean I'm not going to put money into something like Realty Income or Apple, but as of right now, this is the glaring deal in the portfolio. So I'm trying to budget enough so that I can buy 4 shares of Google this month. We'll see. So that's my goal, is to try to really take advantage of this price drop, because I think people are overreacting. And then, of course, guys, I would buy Costco around $1,000, and Berkshire is around my buying price, down big today too. So it'll be interesting to see what happens, because I'm also going to the Berkshire Annual Hathaway meeting this year, so it'll be interesting to see what he has to say. That's all the way in May, though, so it's March, April, May. So a couple months away, but it'll be interesting to see how he answers the tariff questions. and he does have a crap ton of cash. So it's like people are estimating that he's saving up cash because he's got a really big acquisition, or he thinks the overall market's going to tank and he's going to take advantage. So either way, shareholders are going to do well with Berkshire. So it's like if he has a major acquisition that he's looking to buy, or if the market tanks and he has this shitload of cash, either way, he's going to make a great return on investment for his shareholders. So I'm really bullish on Berkshire, and I'm excited to buy my first share. But with that being said, guys, I just want to say thank you so much for watching. Remember to like the video. That really does help with the algorithm. I've been trying to post every single day. I've been doing shorts as well, promoting a little bit on shorts, so I'm seeing a lot of growth in the channel. But I really love doing these videos, so that's my bread and butter for the channel. I love doing these videos. So remember to like the videos, because that does help. Hit the subscribe button, guys. We have gotten like 44, 45 subscribers since the weekend. That's insane. So we've been growing so much. I'm so excited for the new subscribers. And make sure you check out the shorts too, because I've been trying to do at least 1 or 2 of those a day, just because I have fun with those. So thank you guys so much for watching, and I'll see you guys tomorrow, Wednesday, with another Robinhood portfolio update. Take care, guys.